do I feel like I'm the only one on board with this?
A week of...
No, not a week. Just like, go up on a Sunday and work Monday and Tuesday, come home.
My only issue with working remote has always been not having it set up.
I have another monitor. Well, we could just put the monitor in the back. This is a virtual world we live in. You know what I mean?
I said I was in. I don't know.
Well, I think it's Karen in HR. She's holding us back.
Oh, man.
She's like, you've had too much vacation time lately. She won't let us go. Miss the good old days of just being a little old jazz. Now, Josh on Five's always got the hots for Karen, and she'll do anything that he says, and we can't go on our ski trip. Hey, welcome to the Closing Beat, everybody. Happy Tuesday. How you doing out there? I was just kidding. We don't have HR people here yet, although maybe that could change. But yeah, just having a little fun. I was telling Cody, we should that hotel I just went to. We should just a quick flight, hop on up there. Man, what a sweet place that was. But maybe not the fancy room. Anyways, welcome to the Closing Beat. We are financial advisors here that are a little offbeat, and I know that rhymed. I caught that. Don't think I missed that. And we're going to talk about the stock market today. I like to do this class to really just give you guys updates on what's going on and kind of show, sort of selfishly, I like to show that, hey, we actually do know what we're talking about. And today, I'm going to do something that you've never thought of before. Hang with me. We are going to talk about how an analyst, like my background, managing mutual funds and such, we're going to show how you would analyze one piece of data to gather information about something else versus just taking everything for face value. So we're going to talk about how analysts at this point know that used car prices are now going to start falling. It's not a question. They're going to start falling. Super cool. So we'll take that into consideration later, and I'll share that information with you as we go. As far as the stock market goes today, it's celebrating Valentine's Day just like I am. Today, not yesterday. I'm about to go get 50% off candy and have a great night with all the chocolates and stuff that I want. Granted, they're leftover chocolates, but it's going to be a great thing. And the stock market celebrated today because, ta-da, we're a little bit higher. So you got a, we'll call it Valentine's Day observed rally, right? Very, very cool there. So we'll talk about that here in a second. Also, our wine and wealth. Every week, I like to teach clients a little something new, go over something, help them with an idea. We are the only advisors that actually care about your other accounts, your 401ks, your TSPs, HSAs, 529s, and we can now directly manage all of those here for you. And it's all included in our service, so it's not like we're going to charge you more or something. So you can check that out if you're one of our clients. Let me know if that's something you want to do. This week, our wine and wealth class will be performance review, right? So you guys as the client, wherever you're at, if you have a financial advisor, you should hold them to a performance review. They should tell you how things are going. Make sure they're looking at your accounts and stuff. And so this Thursday, the class will be the performance of our funds, how they're doing, the mix of them, how changes we made, all that good stuff. So we'll cover that. I'll do like I always do, spend like 5 or 10 minutes just giving you the overview. And then those of you that want to know the geeky details can stick around, and we'll do all of that shortly after. There was no office trades today because I forgot I was taking my daughter's boyfriend on a discovery flight. And so I didn't do that, but we're going to do them for the rest of the week. So we'll even throw in Friday for you as well. And I didn't have a lot of changes here today. I try to keep it straight, right? Like if I'll make the changes on the office trades so you can see exactly what happens. And I try not to do too much outside of that, although sometimes it's enticing. If you want to check it out, jazzwealth.com/research. And you could join if you like. It's $13 a month. Get to see how we do things. We are not a stock picking service. We'll show you stuff you have never seen before. All right, let's take a look. We have old Russia out there. I guess we're supposed to trust Russia, and they're moving some of their troops back to their original bases after doing their military exercises, as they called them there. And apparently the market says, we believe you. Yeah, okay, that works for us. No international conflicts. We love it. And of course, that's a good thing. And so the markets move a little bit higher. So here's the S&P trying again at the higher low. Remember that first one failed. This second one here, I'm still skeptical, to be honest with you, but we'll see what happens. And I get the question a lot about how the markets perform around wars or geopolitical type events. Remember that they are just, while they're, sort of devastating, if there's a war, we don't want to see that. For the stock market, it's just usually a temporary blip there. If you think of the China trade war that we had under Trump, a temporary blip, right? You go back to different events that have happened. They tend to be just temporary blips when we start things like that. The Iraq War was just a temporary little downturn in the market. Now, with Russia, should this happen, if you're curious, the big focus or the volatility would happen with natural gas. Russia is one of the largest exporters of natural gas. That could be to the EU. And so that could be a big deal for them. Oil could be an issue because oil inventories right now in Russia and Europe are a little bit lower than normal, considerably lower than normal, and they haven't ramped up their output, right? So that could cause some volatility in oil there. And if you want to boil it down, I'll tell you what, if you want to look down to individual stocks, you want to tell me why Boeing was higher today? A little bit of a lesson there, things you just keep in the back of your head. Boeing higher by 3%. Really no news to speak of. Why would it be up 3%? Boeing is a big buyer of titanium from Russia. And so the idea there is, well, if we're not going to like ban Russia from selling anything and they're going to actually play nice and everything, maybe their exports will continue. And Boeing relies on the titanium from Russia. So that's the reason for that. Now, I will say, Russia and Ukraine, this whole thing going on there, not such a big deal for the U.S. markets if that were to come, if they were to actually do something. Now, if China watches and the U.S. does nothing and they go, I think we'll take Taiwan. Good night, right? That's a different story because Taiwan controls a lot of semiconductor, individual semiconductor companies, and they do a lot of semiconductor production for other companies. That would be a nightmare. So thankfully, we're not talking about that. All right, if we look at the S&P here today, you're down about 6% year to date, but it was another gap and go type day. We just talked about this the other day. I'll go over here, show you the 5-minute chart. So here's the SPY if you want to look at it, and I've taken out pre and post market trading. So the stock market or the S&P opens up here, you get a little bit of a rally, and that's it. Right? It's called a gap and go type day where all the action happens on, not a gap and go, a gap and stay. So all the action happens on the gap and then we stay. Nothing happens. So the investor enjoyed today. The day trader did not enjoy a day like today for the S&P. But nonetheless, you still got about a 6% loss on the year there. And if I point out a few things, the action came in the tech sector today. Even though rates were moving lower, rates were moving higher. Tech was higher by 2.6%. A lot of the big names continue to recover there. Consumer discretionary, I'll use the XLY to share that with you. A lot of them were stronger today. It was one of the better performing areas. And that little sector we called basic materials the other day, showing that that was one of the ones waking up. Well, that continued to do so today, up about 2%. And I think that's, as boring as it is, that's going to be an area we're going to have to start talking more about because of the money rotating over there. If you look at the NASDAQ, also, obviously very nice today. You know it should be strong because tech had a strong day. If you're looking through the NASDAQ today, you're going to find a lot of semiconductor names towards the top of the list. NVIDIA, nice little 9% gain. Micron Technologies coming up for you there. Almost to new highs, 7% gain on the day. Lam Research, it's the weaker one now, but continuing to at least try to rally. That would be, I think, if I, just off the top of my head, I'd have to say they're probably the weakest of the major semiconductors in the NASDAQ. KLA 10 Core, Applied Materials, right? That'd be the second weakest. All moving higher on the day. You also have Airbnb with earnings. We could talk about that a little bit later. And Moderna, finally getting a little bounce off of lows, but I don't know how you tell if that's the lows yet, to be honest. If you look on the downside, there's only a handful of stocks that were lower on the day. You got American Electric Power, actually a nice little pullback there. I put it on our watch list for tomorrow's office trades to take a look at. Pepsi pulling back 0.5%, and Splunk, after Cisco talking about buying them, just took a little bit of a day off, but that's pretty much it there. And the Dow, up 1% on the day, not looking too bad. The best performer, by the way, was the Russell 2000, taking a shot at maybe breaking through the known resistance area there, so we'll see how that goes. You've got crude oil down about 3.5% on the day. That retreats, obviously, de-escalation. We like to see that. Maybe oil's a little overpriced here if there really is going to be no conflict. I don't think that's the last of it, by the way. I think it'd be pretty naive to assume that, oh, they're just withdrawing troops, and then maybe a little bit more, a little bit more. Nah, I don't know. You know, that's like when someone does a magic trick, you're like, nah, there's something there. I don't know what it is, but something's not right. Well, with the lower price of oil today, I think you might have noticed airlines. Come on now, buddy. American Airlines higher on the day by 8%. United Airlines also about the same, 7.5%. Nice break above the 200-day moving average there. Delta Airlines is a little bit ahead of schedule, above the 200-day moving average and also looking stronger as well. The decline in oil also helped out our Marathon Petroleum, which is one of our office trades. That one's moving in our direction nicely. We had sold the 82.50 calls, so one of our short positions. I'm happy to see that drifting lower, but I didn't do anything with it just yet, so I still have it there. Speaking of office trades, I'll keep you updated here just real quick. Air Products, APD, just a one-day trade. I had put it on, took it off today, took the quick profit. We are going to start working on that. You ever wonder if you put on a trade or an investment and it makes a lot of money quickly, do you wait, right? If you expected to make money over 3 weeks and you made it in one day, would you take it in the one day or would you hold out for more? If you made, half the potential profit in 4 days, would you take it or would you wait 3 weeks, right, to see what else you could do? If you made 10% in 3 days, would you take it, right? So we're starting to work on that to get you a nice little chart to reference because we made about 28% of the total premium in one day. Not to brag, I'm just saying that was this 28% of the premium, not 28% returns. So let's make sure that's clear. And so as we do on the office trades, I of course show you the dollars and the contracts and all that stuff. But so that one's a no-brainer. Yeah, sure. Could you make more? Of course. But how often do you get that, right? Where you make a quick profit. So we took that one off. And then I do want to point out, I had mentioned the other day that XHB, this was a long position and the time was running out, very much like Starbucks. Remember, I took a small loss on Starbucks thinking, you didn't bounce. It was supposed to bounce and it didn't bounce. So XHB is the same thing. I took I paid back 18% of the total premium there. So gave that back, got out of it. That is officially a small loser. And we'll see how tomorrow goes. So I just quick update on that one. Let me breeze through the new highs real quick because there's not many, and then I'll get to the cool analyst thing we'll talk about. 6 new highs, 4 new lows. You got, there you go. You got Fidelity International breaking a new lows there. Nothing to do. That's extended. It's working on it. Nothing to do there. That would be earnings. Philip Morris did hit new highs. This is Cody's short play. It didn't hit new highs, but I actually like that. So it reached up there to try to keep going. Cody's short, wants it to go down. And look, it drifted down, right? So we're seeing that there's no buyers up there. That's really the lesson from this. You had an attempt to run and the steam ran out. You got to see that. Granted, you have to take a day of heat or something. Actually, he's only a penny off. But now you have a recipe to get more people to say, I see that. It can't go any higher. Maybe it's best that it goes lower. So that's a good one. EXPE also hitting new highs. Great reversal over the last 2 days from what happened on Friday. So you like to see that one. Marriott was earnings. That broke to new highs as well. I think Marriott beat on everything there. Much better than expected earnings, stronger revenues. They didn't give guidance or anything, so that one doesn't officially count. But still moving to new highs and nice and strong. Can't have a problem with that one. And lastly, AbbVie hit new highs. Just strong power trend here. Nothing really exciting to point out, but I thought that would be kind of fun to look at as a watch list item. You got Michelin. As far as stocks in the news, Michelin, these they're not American. It's a French company. I always think of that when I see Michelin. Sales 2.5% above expectations. The guidance was lower. They had income 4% lower than expected. The main thing I got from it, and probably the reason for some of the weakness, the company said that they have a lot of cost-saving strategies right now, but those cost-saving strategies will not keep up with inflation if this inflation continues at the current level that it is. So I think that's probably where everybody was focused. Intuit. A little bit lower on the day. Revenue is 2.7% lower than expected. They said this tax season is forming slower than last year, but they still see strong momentum across all their businesses. Remember, last year was a different story, and actually the year before that. But it was a different story because there was a lot of moving parts due to COVID. Well, we don't really have that this year. So tax season just is progressing just like it normally would. And so that may be just not as exciting as the last couple years. I'm going to hit Whirlpool real quick. So Whirlpool in the news here today. They're going to do they raised their dividend by, 25% or something like that, about 25%. And they're buying $2 billion more dollars back in their stock buyback program there. So that's awesome. And Monster I think Monster is looking to partner up with Constellation Brands. They may be merging with Constellation Brands. That came from Bloomberg, though. And Bloomberg, it's a fine periodical, if you will. But they tend to jump the gun on a lot of stuff. So I don't know. I saw Constellation's Brands did fall today, so maybe there's something to it. But you know what I mean? All right, and lastly, and our focus here is Avis. So Avis lower by 12% on the day. Now, this is a fun one to look at. This goes into my topic here. Avis is a fun one to look at because it gives you sort of an insight into used car prices. Did you know that Avis, Budget, CAR, the ticker symbol, they can actually move used car prices both up and down because they buy so many of them. Not only that, during COVID, they had actually liquidated a ton of their inventory. And then COVID was, coming, everything was fine, life's getting back to normal. They had to buy back a bunch of cars because people wanted to rent cars. They wanted to go out there and travel a little bit, right? So they had to buy a ton of cars. They actually moved prices of cars. They're partially to blame for it, if you want to say that. Anyways, they had earnings come out and they beat quite a lot, actually. They beat by almost 20%. They saw a big increase, about 17% increase in the number of rental days. Remember how I talk about earnings for individual companies and we focus on subscribers or we focus on gallons of oil or crude sold, delivered, refined, etc. Well, these guys focus on the number of rental days, right? So their number of rental days skyrocketing, meaning more people are getting in the car and they're using that car longer, which means they're bringing in more money. So what does that tell you about Avis? Well, they need more cars. If one car is now gone for let's say it was almost 6 days, 5 days, right? And somebody else wants to rent a car, they don't have it. So what do? They got to go buy more cars. That drives up the price of cars. In fact, it's easily correlated. You can take a look. I'll show you here in a second. As the sort of rule of thumb is, as the number of rental days goes up, so goes the price of used cars, right? And it's actually very much correlated there. So let's take a quick look over here. All right, so in black, what I have is the actual car rentals, rental car agency rentals, right? So obviously doing really, really well, right? Correlated to the green line, which is the price of used cars and trucks as well. So as rentals go up, so goes the price of used cars because they're out there sucking up every good deal they can get, and we're left with whatever's left over. Now, what's happened here is car rental prices have started to pull back since the first quarter there, or since the fourth quarter. So if car rental prices and car rental days are now starting to pull back, that means they don't need to buy any more cars. In fact, Avis now has their highest fleet size ever in history. It's 435,400 cars. That's crazy. But what's happening? You now have car rentals coming down, right? They don't need to buy any more cars. They're not going to because car rentals and the car rental days are actually going down, somewhat seasonal in a way, if you will. But they're pulling back. So they don't need new cars. They're not flooding the used car market with new purchases and everything. So look what's lagging behind. The price of used cars and trucks. So everybody and their mother now knows that this green line is going to catch up to the black line, which means used car prices officially are going down from here. There is no, it's not a question, it's not a guess, it's a matter of the players that are moving the market are done moving the market and have no earthly desire to add more cars, and therefore the market now goes back to us. So now we are the normal used car buyers and sellers. That's why you see, if you look around, used car inventories, going up there a little bit, right? So using Avis's earnings, we can tell a lot about the used car market, and that's to me one of the coolest things you can do there because they are correlated. They will be correlated, and so if you're buying a used car and you're waiting, cool, right? It works out. Cody, are you not trying to buy a used car? Maybe at some point?
Yeah, I mean,
you would like to be in the car market?
I'm new to the car market. Yeah.
Yeah.
I'm in no rush.
He's dipping his toe. He's in no rush. Now he knows prices are definitely going to be coming down. Add to that the obviously rates going up a little bit. That's not a big deal, but that'll slow some people that perceive rates going up as, oh no, I shouldn't buy a car. We're talking pennies here, but anyways, something cool to share with you there. With that in mind, I have done everything I want to do. I will take questions if there happen to be any, and I will see what I can do. Kirk's got a good point that insurance companies are racing to raise prices as well, right? So you're about to see inflation in your auto insurance because the cost to repair a car going up, right? They got to make good on that. Yeah. Oh, you guys all know. Yeah. Yeah, there are a lot of very expensive cars. I went to this hotel over the weekend, and there was a car parked outside I had never seen. I just had never. It looked like a little sports car, almost looked like a little RC remote control car. Turns out it was a McLaren 600 LT or RT or something. You know, that thing starts at $250,000. I mean, I got nervous. We were riding bikes around it, and I was like, I'm gonna walk the bike next to it because I don't want to fall into this car. That was crazy. Some little young kid got in that car, and I don't know if it was really his car or not, but well, it was a sweet car. I just can't imagine starting at $250. And that could have been the nicer model. I would have no way of knowing. Yeah. Yep. Steel prices averaged $35 per 100 pounds, which increased almost 100 and is now 54. Well, there's a lot of that going around. You see lumber maybe waking back up again there, and there's just a lot of stuff going on with the prices out there. Graysign says, is it possible for an ETF to go to zero? Has there ever been something like that? You could, if you did a scan, you would find that there are plenty that have done that. It's not accurate though. If they close up shop, it does officially go to zero, and so it would look like there's a lot of them that have done that. Has any naturally gone to zero? I don't think so, because all the underlying positions or whatever they've invested in would have had to have gone to zero, or it would have had to been a really, really hybrid type, super leveraged ETF. So most ETFs are, it's just like a mutual fund in a way where you're participating in a basket, and that basket holds a bunch of different positions. So it should not be a concern for most of them out there. And if you ever do see one go to zero, it's just because they close their doors and they just pay you back for whatever you owned it at. A lot of them don't make it. It's a tough one there. Yep. Orange futures. You like your futures markets now, do you? I like gold, I like the Russell, and I like oil. Pretty much the only things I stick with. The VIX is in there too, but not often. Anything else, I don't really venture outside that too much. Here's my daily Alibaba question. Is Alibaba coming back? There you go. What do we have different today that we have not already seen? Nothing, right? There's no I hope it does, but there's no reason to believe yet that the coast is clear. I can't wait till the day that I get to say that's not the case, but for now, that's it. Rode in a $3 million Bugatti. Crazy, right? $3 million. I mean, look, we all have that thing, right? Somebody was attracted to that car and spent $3 million. All of us said if we had an extra $3 million, there's surely, there's something you would buy. I mean, we all have something. We would probably disagree on what it is if we had to vote, but the car is just not it for me, man. I don't know. I think of a lot more fun things to put $3 million into. But anyways, let me see. Make sure I got everything. I did get everything. Yeah, well, I did. Perfect. I will wrap it up there. Oh, I forgot to tell you about tomorrow. Tomorrow we've got earnings from Kraft Heinz, Generac, Ryder. That's kind of a good one. Shopify, they'll be in the mornings, right? Vulcan Materials, AIG starts the afternoon earnings reports. We go to Albemarle, AMAT, Cisco, DoorDash, Marathon, and NVIDIA. DoorDash would have the best record, but it's a short one. So they've only been around 4 quarters. The stock has been higher every 4 quarters they've reported so far. So it's a limited data history there. And there's a bunch of ties for worst. Actually, Ryder is the worst. So Ryder is lower 6 of the last 8 earnings reports there. That's ticker symbol R if you're interested in that one. Basically in a big choppy range, so not one that'll probably grab a lot of attention. Yeah, we'll see. Yep, I saw that. Old Warren Buffett, right at the right place at the right time, huh? Yeah. Well, we know what Adam wants to spend his $3 million on. I love it, man. All right, I will wrap it up there. Get out of the way before I get in trouble. Back to work for me. Thank you guys for watching, and we'll see you tomorrow on the office trades as well. So that'll be at 12:15 live in the dojo, whether you are a client or just a subscriber. I will see you then, and enjoy the rest of your day.